today we have another fantastic guest with us, Wade Preston, who is the executive director of the North American Blockchain Association, or NABA. Appreciate you joining us this morning.
Yeah, man. Really great to be here.
Absolutely, dude. So, um, for those that may not know who you are, or how you became the executive director of NABA, can you give us kind of a walk down memory lane of your background and then what led you to this spot?
Yeah. I ended up in this spot because a long time ago I was a kind of fresh faced college kid, very idealistic, wanted to save the world. Got a philosophy degree because I just really wanted to be in it for the money and the women, and philosophy. uh, uh, so I got a philosophy degree. Kind of got out of school and was working through grad school and working in the nonprofit sphere, trying to save the world. I was in West Africa working in microfinance. We were giving out these little tiny loans to, people who were starting small businesses in rural West Africa. And I mean, literally like selling cooked rice by a dirt road. And yeah, and as I was there and I was on the ground just meeting with like entrepreneurs in the developing world, and like just saw like just this grit and determination, and like realized like, man, these people like that they have what it takes to like, better themselves. They don't, need charity as much. They need access to like markets
Yeah.
and the sophisticated financial tools that we take for granted. And I wanted to create a business that kind of plugged into that, and maybe tried to level the playing field between the supply side and the demand side. So my wife and I started a coffee company. We wanted to just kind of work directly with farmers in the developing world, and create just solid, transparent, and fair ways of doing business with them, and also a good community back home. And the best part of my story that people always chuckle at is that's when my wife was 7 months pregnant, and we had a West African refugee live in our basement, like you do. And that's when I decided that, or I guess we decided, is probably a much better way to say it. We decided that I would quit my job and become a barista, which was a great conversation with my father-in-law, the Colonel. Um, and Yeah, we started this business and kind of grew it into a nice little business. It's got a wholesale component, micro importer, a few cafes across the Southeast. And in that, I started messing around with crypto because I saw it as this way to solve this problem of getting more and more people access to financial tools, just democratize access to the things that we again take for granted here in the developed world. And as I was building out some solutions for global supply chain and also access to capital for Main Street entrepreneurs like myself, I realized there was a huge gap in policy, and started working with people here at the state level, and kind of got pulled in further and further into the policy world. Um, was a founding board member for the Alabama Blockchain Alliance here at home, and then eventually became a founding board member for the North American Blockchain Alliance, which we kind of work to coordinate a lot of state level policy for crypto. In between, I've worked with DeFi Education Fund in DC, and I've also have worked with and continue to work with Stand with Crypto on the grassroots side of things. So yeah, that's the meandering road that got me on a podcast with Jake Claver.
Well, it's everybody always has an interesting backstory, where they solve these problems and they see that this technology, these protocols, these assets are a way to be able to remove those frictions and create prosperity for others. So really exciting, to just kind of have that. It's good to know somebody that is in your position has that background and understanding. So on that, we were kind of cutting up before we got on here, but ETH Denver was
Yeah.
last week. Was there any takeaways you had from there? Anything that stuck out to you?
Yeah, ETH Denver was fantastic. I love that conference. I've seen some stuff on social media going back and forth, people kind of like making a big deal out of the conference. Like some people saying like, oh, like it's dead and it was just not what it used to be. And then other people just being like, oh man, it was actually amazing. It was super high signal this year. And it's like kind of weird to see like that, like such disparate opinions about the same thing. It's like, but I saw this take that someone had, and I can't remember, but it said it was, yeah, I think it was really appropriate. It was like crypto going through adolescence. Um,
Yeah.
yeah, it was a good mix of like kind of the like little bit of that like builder and degen and like meme culture energy that you would expect, but also like colliding with kind of like institutional finance and government and policy and like the things that like are inevitable if this is going to become like a real financial system with real use cases and one that can bring prosperity to a whole lot of people throughout the U.S. and the world. So yeah, that collision I thought was really interesting. I helped host a policy lunch with some friends of mine with the Blockchain Association, and it was phenomenal. We had an incredible room of like just head down builders that don't usually meet with policy folks, building things from like decentralized identity protocols to, DeFi yield to, on chain charity stuff. And I mean, just all over the map. And they were in the room with folks like Commissioner Peirce. We had three different representatives from the U.S. House. We had staffers from U.S. Senate offices there, and it was a little less than 100 people in a room. And we didn't do a whole lot of programming, just one quick panel, and then after that, it was just breaking bread together. Yeah, and just seeing people like kind of have those lean in conversations with each other. It was really cool. So yeah, I think it was to me, Ethan was fantastic. Loved the event. I mean, we forget that that's a community hosted event, right? Like so many of these events we see are like run by these like massive organizations that have these huge bankrolls, and to attend them is like several $100s. And ETH Denver is like, it's community driven. It's free to attend. Like, it's a bunch of people that put together a DAO named after a spork and like decided to throw this conference that like turned out to be this massive win for the whole crypto ecosystem. So yeah, it's interesting to see people kind of fud something like that. I'm like, this is why we're here, like
Yeah.
but yeah, all that to say, to wrap it all up, adolescence, like crypto adolescence, is a good way to describe ETH Denver this year.
I can relate to that. So we were there, we had a booth and we spoke on a panel and in a bear market. So I've been here for multiple cycles as you have, and it is high signal when there's not a whole lot of frothiness in the market. It's the people that are really here to do something and leverage the technology and build cool stuff that tend to come together at those events. And to hear that the lunch that you guys hosted went that well is fantastic. I'm really excited that, policymakers are leaning in and understanding the tech side of things. So, kind of transitioning to this next piece, I was actually in DC last year because we're part of the Digital Chamber. We were advocating with congressmen and women to pass the Genius Act and the Clarity Act, which we're still waiting on. But while I was there, I've sat on a lot of these councils and many of the attorneys and other policymakers really just, they're operating like 2018, 2020 as far as their knowledge base about the blockchains and the capabilities and everything that exists. So I think that's really important that you guys brought together the people that are actually developing things today with those policymakers so they can just have a deeper understanding of what they're actually regulating.
Yeah, absolutely. My hopefully good-hearted joke about you know legislators is when you look at the kind of median age of a U.S. Congressperson, and even sometimes at the state level, it's pretty high. And my well-meaning joke is, we're putting like blockchain and AI policy in the hands of people who, give their grandchildren the TV remote to program it for them. So there's a big disconnect. But I say all the time, people ask me like, "Oh, are you crypto? Are you like ready for a blue wave and midterms? And are you like, who do you want to win this and what?" And I'm like, look, I don't care red, blue, whatever. I just want curious people. Give me curious people in the Senate and in the House that are actually going to look for solutions and not just show up thinking they know something and have a decision pre-made. Um, just yeah, give me a curious wave. I don't care, red wave, blue wave. Just give me people who want to solve problems.
Well, so on that, what do you think's going on in DC right now? I mean, we've got the summit on Friday this week. Um, do you think there's still bipartisan, support for crypto and getting this Clarity Act across the line, or do you think things have kind of shifted?
No, I think that listen, here's the reality of clarity that people I think overlook a lot is there's a lot of tension between crypto industry and the banks on this whole stablecoin yield issue. And the reality is the banks need this just as badly as crypto does, and maybe even worse. Because Genius, yeah, maybe worse. Yeah. So Genius allows for third party entities to offer rewards on stable coins. Um, and the banks are really uptight about that, and they want some for no pun intended, they want clarity on exactly what that means and what can be offered and what can't be offered, and that's where the negotiations happen. So the last thing the banks want is for clarity to fail. That banks want crypto market structure to pass. And that's kind of, a few weeks ago, you kind of saw this thing where Brian Armstrong sort of just walked away from the table because the industry can do that. Like industry is in a place where market structure passing would be very, very good so long as it's good market structure, right? We don't want to solidify something, put something in stone, through a congressional act that comes in, that becomes law. That's not good, because we've got pretty favorable regulators now in the CFTC and the SEC. So we've got, at least 3 years of being able to, get some good rulemaking and have a little room to breathe and to show the world that, like, hey, with some good rulemaking, like this is really a lever to pull. It's not a thing to be scared of. So yeah, I think because of that, because both parties really want this to pass, they'll get to some understanding. And I think it's, first step's going to be stablecoin yield. That's the tricky one. They're working through that right now. I really believe that's going to get worked out. I think what we'll probably see is that risk-free like yield that's coming through straight from the T-bill backing. I think we'll see that probably get pulled back, but being able to earn yield on stable coins through liquidity provisions and lending and DeFi protocols, like that's probably where they're trying to figure out exactly how that sorts and what it means. They don't want you to have yield for passive holding. When I say the banks don't, because that competes with their monopoly they've had since 1913. And we can have a whole philosophical discussion about whether or not that's okay or not, but that's the thing they really don't want, is that kind of competition. That they'll wrap it up in like, oh, it'll cause deposit flight, but I mean there's already savings accounts out there through like SoFi and others that offer even more than risk-free rate now, and it hasn't caused deposit flight. But yeah, I think we'll get there. And it's just a matter of where they're going to land on that, and then it'll go. I think in markup in the Senate Banking Committee, we'll probably see again these ethics, kind of saber rattling about ethics, and ethics is ultimately non-germane to a market structure bill. Like ethics has nothing to do with the structure of markets. It has to do with how government officials interact with them. So, but those who want ethics guardrails know that this is probably their best time to, like, get them into something, is use this vehicle. So they'll do a lot of they'll make a lot of noise out of that. Personally, I would love to see an ethics bill that was outside of crypto market structure, something that was very in scope. If the Democrats don't want the Trump family to have crypto holdings, and the Republicans don't want the Pelosi's to do insider trading. Like, okay, come together, make a bill, call it the Pelosi Trump Act, and have it on like trading ethics, and we'll do that. That's probably never going to happen, but that would be logical to the rest of us in the world, right? But yeah, after we clear yield or rewards language, and kind of go through the motions on the ethics stuff, and hopefully that doesn't become a landmine. I think we've got a bill, and hopefully it's all wrapped up before April, so doesn't bleed into midterm campaigning. That would be bad.
Yeah, that's kind of my concern with it. This on the yield part, like how does that affect the average person? Right. So obviously it affects the banks, it affects the exchanges, a lot of people that are at the table, but for somebody that's got some money at a bank or a crypto exchange and they want to be able to get paid passively, like you talked about,
Yeah.
you think that's still going to be an option, or you think it's going to be, less than what it is now?
I think in a perfect world, right? And my like, kind of sensibilities about, what sort of rights human beings should have, that like, yeah, people should be able to access the risk-free rate, and like they should have, liquid access to T-bill yield, right? These are like short-term T-bills, 60, 90-day T-bills. And it would be amazing if you had a wallet that you had stable coins in, and you could spend those stable coins whenever, right? You go buy a cup of coffee, but that wallet, while it's just sitting there, it's just earning, yeah, it's earning some significant portion of the risk-free rate. That would be, I mean, philosophically, that would be great. I do understand that the political realities of that are tenuous, and I think that, and also we know that you can earn way more than the risk-free rate, um, in some fairly safe vehicles, right? Aave or something like that, right? Now you can't have that sitting in a wallet that
You
like
think
you can't
so?
spend, you can't buy your, yeah, you can't buy your cup of coffee, out of that same pot, right? Just have it passively earning out of an account or a wallet that you can spend, any time out of. You have to kind of set it aside, right? Um, but I think that's fair. I'm not gonna. I think politics is what it is, right? We got to choose our hills to die on, and I think ultimately, if we were able to like use Morpho or Aave or whatever through like a good trusted front end, and like just normal folks can access that, and they can get you know 5, 6, 7, 8, 9. I mean, I think Zirkit is offering, they have a little bit of a looping, it's probably a little higher up the risk curve, but I think they're offering like 11 or 12% on USDC. Like, that's so much better than what we have right now. So I'm here for it. I think that's probably where we'll land. And I think I'll personally, I'll count that as a win. But yeah, we'll see. But I do think philosophically it would be great if you had, I mean, just for the average American, like you asked, I mean, yeah, an average American should have a wallet that can never overdraft, never catch that like $40 fee for, and also just pulls in interest. Like that's uh,
On blockchain, that can never happen, right? Like, you can't spend money you don't have. It's
exactly. Um, and banks, make a lot of money off of charging people for money they don't have. And we can have a whole discussion over the ethics of that, but yeah. Anyway, yeah, I think we're gonna get there, and I think it's gonna be ultimately good for the average American, and I think we'll have some good, safe instruments that people can generate yield, that's 5 to 8% pretty pretty easily and safely, I think.
uh, what's the conversation like at the state level? Do you think that the states are having some impact? I mean, I know you were with the Alabama Blockchain Council before you kind of escalated up in your career.
Yeah, and that's what I do now. I work with a lot of state uh, blockchain associations that are working on legislation at the state level, where there are currently, I think, 4 state stablecoin framework bills that have been introduced. I think we got more on deck. We'll probably have 7 or 8 soon enough. But Alabama, Georgia, Florida, and Indiana all have them introduced now. The Genius Act allows for not only allows for, but kind of encourages um, any stable coin issuer under $10 billion. The federal government just doesn't want to deal with that. That's too many issuers. They want to push that down to the states. But the states need a framework to regulate those. So I think Florida is looking really good to be kind of the leader in the clubhouse. I think we'll see a Florida bill get passed pretty soon, and we'll work hard to make sure that that's a good one. And we're working with the great folks at Florida Blockchain Business Association down there. They do awesome work. Samuel, and they're working really hard to make sure that bill is done right. And I think that's going to set the standard going forward. And we'll have. I just want to see innovation happen at the state level. Like, those are the sandboxes where we can do interesting things. And a lot of these states that have been. I mean, think about how much like of your and people don't see this because it's way behind the scenes, like the deep plumbing. But like states like especially Alabama or even Florida or Missouri or Montana, whatever, they are subbing out so much of their financial infrastructure to Manhattan and Atlanta to some degree, because a lot of payment processors are in Atlanta. Even Texas, as much kind of financial services that Dallas has, a lot of that payment infrastructure, and it's getting kicked out to other jurisdictions. And good stablecoin frameworks are a great way to like rehome that without just like this like huge compliance burden. And people hear like, oh, there's not the compliance burden, and they go like, oh, it's crypto, it's scary, no compliance. No, there's no compliance burden because it's transparent, right? It's all on chain, like it's easy to track. And to that same effect, I think states will really benefit from good stablecoin bills, because it's going to allow them to uh, access state issued stable coins, not maybe issued by the state government themselves, though we've seen Wyoming do that, but stable coin issued by banks or other financial institutions within their home state. They can utilize those stable coins. They can keep that economic impact inside the state, and they can use it for government payments. And government payments take forever. If you've ever worked on a government contract, it's like 60 days to get a check. There's so much compliance overhead. It takes forever. It's expensive for the government to even pay people. But you put it on chain, like Wyoming's done with the hash power execution of their stablecoin payments. And it's like payments that used to take, 3 months, take 30 seconds now. And they're fully compliant, totally auditable, and more traceable than payments before. So I think states are really going to see a lot of upside from instituting stablecoin bills, and there's a lot of other crypto bills that we're tracking around the country at the state level.
So this is kind of like the money transmitter stuff also, right? Like there's a federal guideline to be a money transmitter, and then if you're a money transmitter and you have clients across multiple states, you have to be licensed in each one of those states also.
Yep.
Okay. So very, very similar infrastructure that they've designed for this, which is probably good. There needs to be oversight.
Yeah, and it's really up to the states how they want to design it. It does have to be, as the national bill says, the Genius Act, it has to be substantially similar. Treasury is, making rules about what that means. So we're not going to see like, whatever, Hawaii, has like pineapple coin, and it's the only stable coin that gets used in Hawaii, and it has no reciprocity with any other states, and it earns 36% APY, that's not going to happen. Yeah, man, if my friends in Hawaii are seeing this, I actually have good friends in Hawaii. I'm totally kidding. I just use them as an example. But yeah, like you're not going to see anything like that. But and if states don't, kind of the salt in the recipe here, and the thing people need to understand is, like, if your state doesn't have a stablecoin framework and it doesn't get submitted, it doesn't get approved, then you're like those small issuers inside your state, they then have to get like an OCC, federal OCC charter in order to issue a stable coin. Um, and it's a whole big mess. And you really you really throw a wet blanket on a lot of
Innovation could happen.
innovation, yeah, and business development, economic development in your state. So super important to get those frameworks passed. Most of them are going through as bills in state houses. But there's room in a lot of states for those to just go through, your Treasury or OFR, or I think Securities Commission is kind of having um, a role in some of these. So, but very important for these states to do that. I think the ones that are kind of heading in the sand about it, and, we don't want to touch crypto, we don't want to do any crypto, it's like they're just going to get left behind.
That's the way it's been for a lot of the industry. Beyond the stablecoin piece in the States and kind of working through all this stuff with the banks, are there any other gaps that you see in the industry that you think the Clarity Act as it sits today doesn't do it? Like, does there need to be another form of legislation after that?
Yeah, I think on the legislatively, Clarity is like the big sexy bill, right? Like it has all the stuff that we like want to, developer protections, and like we've got to make sure like protections have got to stay in this bill. Like if I could put like a call to action for any of the listeners, like go to standwithcrypto.org, like sign up and email your senator, or and let them know that you stand behind developers who are creating open source code. Code is speech, and we don't want to see people like this industry is going to get really smacked down if all developers just feel like they have the sword of Damocles hanging over their head. Obviously we already have rules on the books for malicious developers who are trying to scam people. But these provisions in Clarity give that. So we want all that, the big sexy stuff, we want that to pass. After that though, I think it's going to get decidedly unsexy, but very important, because we'll go on. I think the next thing is going to be tax. We're already starting the tax talks about crypto and how it's treated from a tax perspective. And then after that, I think we'll start to see some, real talks about insurance, because as like there are insurance requirements for everything, right? And a lot of stuff in crypto can't be touched easily by asset managers and lots of other financial institutions, because there's no risk mitigation protocols in place. So I think that will be the next thing, and that's going to be a very state-led thing, because for better or worse, insurance regulations are kind of a patchwork of state regulations. So yeah, taxes and insurance. So it's gonna get real exciting, right? Break out your actuary tables and your tax codes. But those are going to be meaningfully important, and I think they're going to have market impacts that people don't really understand, but are going to be very very impactful.
Yeah, we deal with all of that. So we own the largest RIA in the world for managing digital assets, have to deal with the compliance and insurance and custody and all that fun stuff that people really just aren't at the table for, right? Like we had quotes from multiple people, and just to get E&O and D&O, something that you would expect for a normal business to get, that really weren't that many people that would even provide it for us.
Yeah, that's the thing that most people don't realize is a lot of like digital asset firms they're having to go offshore. I mean, it's taking business away from U.S. based businesses, because the only place that they can actually get these risk mitigation products is there's like Bahamian chartered U.S. Virgin Islands, whatever entities.
Yeah, it's we're advocating for it just like you are, and trying to make sure that it's done the right way and set a standard. And, hopefully over time there'll be people that kind of follow behind, and we get it. So, I mean, you kind of talked about, where the legislation's going to go, after we finally get Clarity passed, and hopefully, that's before midterms, like talked about at the campaign trail there. Anything else in the industry that you're excited about that's on the horizon here that you think's a big deal that people just really aren't looking at, or maybe they are looking at?
Yeah, I mean, being at ETH Denver, I'm sure you saw this. Like, it's crazy that OpenClaw seemed to be like the center of gravity for like this, and it's nuts that it didn't even exist like 4 or 5 weeks before the conference. Like it didn't exist at all, and all of a sudden it's like the thing that was like, yeah, it was like the shelling point of the whole conference. So I think agentic AI, we're just going to see like a parabolic. Yeah, I mean, and you know, I think probably the thing that like, folks like you and I, like we're very well aware of it, but just general public is just so woefully unaware of the intersection of crypto and AI. They don't think like, hey, agentic AIs are not going to wait 3 days for an ACH payment to clear. Even like Fed Now windows, they're like, 24 hours, like they're not waiting for that, right? And they're not, if they're on the receiving end of a payment, they're not going to accept a 2.5, 3% haircut on every transaction because it moved through a card network. So, uh, and especially like a lot of these agentic AIs, they're going to need to move in like microtransactions for like to buy tokens and things like that. And I mean, crypto tokens and LLM tokens, right? So, I mean, you could have an agentic AI that could fire off like 1,000 transactions of like 27 cents a day. They're not going to use Visa for that. They're going to have to use stable coins or some kind of crypto rails to make that work. We also need crypto. I mean, crypto is about verifiable proofs, right? And proving intent and attestation with mathematics and cryptography. And when we think about deploying AI to do particular tasks, like we want to make sure that they're staying in the lane, right? If you're a city government and you want to have an AI that runs all of your traffic lights, right? You don't you don't want it to like hallucinate and turn all the lights green. You want to know that it's going to verifiably do the task that you've set it out to do. And crypto's, I think, the only thing that gives it those guardrails. Crypto also is like our, it is a uh, meaningful bridge to the idea of just proof of humanity, which is going to be very. There's a lot of ways to work that out. I mean, you guys, I know like, in Texas, that's where they're manufacturing the orbs, right? This is like kind of dystopian, like, scan your retina and prove that you're a human and put it on chain. That kind of makes me excited and terrified at the same time. But like,
Yeah.
we are gonna have to prove that we're human, and the only way to do that I can see, at scale is going to be using, cryptography in some sense, but, on open network, blockchain rails is, so yeah, there's a lot at the intersection of AI and crypto is, to answer your question, is the big thing. And also we're seeing a lot of bills at the state level, and I think nationally there's a big conversation about like, and I've got kids, I've got a coming up on 14-year-old. Like, this is a big deal in my house. Is like, what access do I want to grant my kid to certain things? And it's like, I think ZK proofs, give that opportunity for us to, yeah, it's like we can have a decentralized identity. We can share, like, if I want to buy a beer, all I need to meaningfully prove is that I'm 21 years old. I don't have to show my address. I don't have to show my driver's license number, my hair, all those like phenotypic traits that are on your driver's license. Like, I just need the person that's selling me the beer to know that I'm 21 years old. They don't need to know anything else about me. And ZK proofs allow us to do that. And, that obviously, goes for all sorts of things. If you're going to join TikTok, to say that you're 16 years old or however old you need to be, right? Or, I mean, stuff like, touch points like, OnlyFans performers, right? Like, that's a real use case. Like, we kind of like roll our eyes at some of that, but we don't want to see kids on those platforms at all. No one wants that. And but also like those people in that profession, I have to imagine really want a certain level of privacy and anonymity, right? And they don't want to be giving over all of their personal information in order to prove that they're just over 18 years old. So yeah, I think those use cases, ZK proofs for identity and the intersection of agentic AI and crypto are going to be huge in the next year or two.
I completely agree, and I think that is, somewhat of a blind spot for the majority of the population. A lot of the people that are gonna be watching this, and are watching this are aware of some of that,
Yeah.
but, like, these are great applications that you've just given there that are real world use cases that I don't think people really have, grasped yet. So, um,
Yeah.
thank you so much for the insight and taking the time out. If people do want to go support Stand with Crypto or reach out to you or advocate, if they think there's something you guys could work on together, what's the best way to get in touch?
Yeah. So yeah, call to actions for me. Join, become an advocate with Stanwell Crypto, stanwellcrypto.org. It's really great site. You can get on. You can actually see an interactive map of all the other advocates that are in your state. You can also pull up politician scores and quickly figure out like, okay, your House rep, like, are they at? They have a report card like A through F, that's based on public comments and their voting record in Congress. So it's not just arbitrarily like, oh, somebody just decides they like them and whatever. It's based on data. So yeah, check out stablecrypto.org. And then also like if you're in the crypto industry and you work with or own crypto platform protocol, or fund or whatever, and you need help in the policy world, like reach out to me. And you can get us for NABA at nablock.org. Join up with us. We have a consortium of several state blockchain associations that are working on passing legislation at the state level, and the state level is where things really happen. Genius Act was literally the only standalone bill that got passed last year in the U.S. Congress. All the other ones were, appropriations bills and, continuing resolutions and things like that. They're just like, jam packed with pork and stuff. Like Genius is the only standalone bill, other than perfunctory stuff like, renaming post offices and things. So like, as sexy as like the U.S. House and Senate are to most people, in terms of like trying to pass legislation, like they're really slow moving vehicles. Your state government passes legislation, pretty routinely, and they do a lot of stuff, and they want to hear from you. So we can certainly help you with that through your NAB at nablock.org. So yeah,
We'll have those links below for people. Get that down there, and then again, appreciate you taking the time. I think this was really insightful for a lot of people just to see where the landscape is, where it's going, where they need to be looking, and yeah, we'd love to have you back at some point.
yeah, absolutely. And thanks for having me, and thanks for doing what you're doing. I mean, people need access to these capital markets, and crypto has been one that I know you've had to jump through a lot of hoops to get people access to these opportunities, and that's what we're all here for, is to democratize access to these markets, and let everybody needs to be a part of the asset class, not just the chosen few. So thank you for doing the work you're doing too.
Absolutely. We'll appreciate you guys watching. Again, go to the links below, and we'll see you on the next one.